You're listening to another episode of the Young Investors Podcast, so sit back and relax as myself, Brandon, and my buddy Hamish discuss the latest in the world of finance and stock market investing. Now, a quick reminder before we get into the podcast is that nothing in this podcast should be taken on as personal financial advice. If you're ever unsure about your finances or investing and you need some help, make sure you reach out to a qualified financial advisor. But with all that said, let's get into another episode of the Young Investors Podcast.
Welcome back, everybody. Welcome back, Brandon. How are you doing this morning?
Hey, actually this morning I'm quite tired, but I'll perk up. Yeah. I'm still recovering. Whoa, what a big episode 100 it was last week. You know, I'm still a bit hungover from it. You know,
a week later. Wow.
A week later,
Amazing.
yeah. That's that night I was so excited about episode 100. I just absolutely sent it.
Yeah,
I'm still hungover.
Yeah, I've actually been listening to it on repeat for the past week.
Oh god.
So
that sounds like torture.
Yeah, I couldn't think of anything worse than listening to my own voice.
I thought that isn't that what they do to prisoners, that they just play the same audio clips over and over again on end. Please make it stop.
No.
I've heard all I can about Google's Q3 earnings. I know every number.
That's good. Were you watching much of the election coverage yesterday?
Oh my gosh, was I ever? It's so weird. It's like here in Australia, we've got no say. It affects us kind of, but not really. Not like in America, but you would think that something where I've but no say and it impacts me minimally, I would just not really care about it. And I was trying to do just some editing yesterday, but I just couldn't edit. I don't know. I was just constantly having to walk back over to the TV and watch the coverage of the votes coming in, and then I'd be like, no, I really need to do some editing, and I'd walk back over to the computer, and I just couldn't focus. I don't know.
It's really strange, right? I'm not that into even the Australian election, but there's something about the US election that they make it such like I hate using this word, but it's kind of like a sport. Like the way that they present it and the way that they've got like this long coverage, and it's just this huge day of just counting and being like, well, if he wins this state, then he has a chance, a 67% chance.
It's just like them playing out a potential finals series or something like that.
Yeah, it's
like, if this happens, then wild. That could happen, then that could happen.
Yeah.
But you're right, it is like a sport, because like there were so many times even when I was watching early on yesterday when they were just looking at Florida, because Florida were the first votes coming in, and it was just like, oh, now Biden's taken back the lead. Oh, this is impressive by Biden. Oh no, now it's back to Trump. Trump's taken the lead in. It's like, oh my god, it's like, how is this interesting? But I don't know, somehow it gets you.
Somehow it is. Very interesting. And for those listening, of course, we're recording this on a Thursday, so we actually don't know the result now, whereas when you're listening to this, you may very well know the result.
Yeah,
so
you have actually much better insight than what we have right now.
Yes.
But having said that, we'll still talk about it.
We'll still share our 2 cents and give our predictions.
Of course.
And such.
Well, we already gave our predictions, so it'll be interesting to see where we're at with those.
Yes. All right, stop. We've got to do sponsor, and then we'll jump straight back into talking about the election. So
let's do it.
Today's episode is sponsored by Sharesight, and Sharesight is an application that you can use to track the performance of your stock portfolio, and it's really good for keeping track of all of the different types of gains that you generate when you invest in the stock market. So your capital gains, dividends. If you have dividend reinvestment plans, then it will do all of those calculations for you. It's basically impossible. Well, it's not impossible, but it's very, very annoying to try and work out the return you're making on reinvested dividends and do all of that for yourself. So Sharesight will do all of that for you, save you a ton of time. It'll do currency gains if you're buying shares internationally or you hold foreign currencies. And then the main reason why I personally use it is when it comes to tax time. So Sharesight generates up to 10 different reports that can be used at tax time to easily work out things such as your capital gains, your dividend income, and more. And at the moment, you can try Sharesight for free by heading over to sharesight.com/young investors. That site spelled SIGHT. sharesight.com/young investors. And if you use that link, you can also get 4 months free when you sign up to a yearly subscription. So go try it out for as long as you want for free. And if you want to upgrade for some extra features and all of the reporting, then you can get 33% off a yearly subscription. So go check it out if you're interested.
Sweet. Yeah. All right. Back into the election. What did you say? You tipped that Trump might come through and win.
I
right?
did. Yeah.
And I tipped Biden. I said that I reckon it was either going to be the closest election in history, or we'd have the biggest margin ever in history. It's certainly not going to be the latter.
Yeah, it was really strange because once again, from what we've seen so far at least, the polls were grossly wrong.
They were wrong
in predicting what would happen, and that happened last time, and that was my impression. And I think Joe Biden had. The polls were suggesting that he was far more ahead than Trump than Hillary was against Trump in 2016. So that gave me sort of, I guess, less confidence in Trump. I still thought he would win. I just thought a similar thing to 2016 would happen again. And I mean, it still might be the case. We don't really know. We can sort of run through some of the what's left at this current moment. But yeah, fascinating. I think the national polls had Biden up 8 to 10 points, 10 percentage points on the popular vote. And that has just not happened at all, right? What's the
popular vote right now? The most current stats that I'm looking at on ABC News right now is Joe Biden at 71.2 million votes and Donald Trump on 67.7. So I think that Joe Biden will still definitely win the popular vote.
Certainly.
But yeah, definitely not by as much as what all of the polls were expecting. I mean, I remember looking at these polls and or these predictions and looking at some of the sites that mathematically work out all of the potential probabilities and possibilities of every single, little thing that could happen.
Yeah.
And coming up with an overall guess of what the probabilities say. And they were saying like 95% plus that Joe Biden was going to win presidency. Yeah. And they were even predicting that both the House and the Senate would turn blue as well. Well, the House is already blue, but you get what I mean. But just phenomenal. And some of these races in some of these states have been so close.
Oh yeah.
And currently, as we're looking at it right now, the states that haven't been called yet are Nevada, Arizona, Alaska, Georgia, North Carolina, and Pennsylvania. Although Alaska's definitely going to be Trump win, but they've only counted like 56% of the votes, so they haven't called it there. But so Joe Biden is currently leading in Nevada and Arizona. Also, did you know that people from Nevada, they really don't like it when people say Nevada?
Yeah, I have heard that. I'm still going to say Nevada. It sounds right to me. So
it does sound right. I feel wrong saying Nevada, but apparently that is the pronunciation.
Yeah, you can't pronounce an A like that if you're Australian. So I'm sorry. I apologize.
I don't know, but I guess it doesn't matter if it's a name. Though, right?
I mean,
if it's a name, then it's a name.
That is true, but
it's not like answer or dance or dance or anything like that.
True.
But there you go. Anyway, this is besides the point. So Nevada, Biden is winning, but geez, it is very, very tight there. Arizona, Biden is winning 51%, 48%. But then over further east, we've got Pennsylvania. Donald Trump is in the lead, 51%, 47%. North Carolina, Trump's 50 to 49%. And then Georgia, Trump is 50 to 49%. So there are some really close battles right now.
Yeah.
It is really hard to predict what is going to happen.
Yeah. I think from the ones that are left, Trump, for the ones that are toss-ups that are really close, Trump would need to win all 4 of them. And Biden just needs one, which obviously would indicate that Biden has a better chance. But with that said, Trump is leading in 3 of them.
Trump is leading.
And the one that he's not leading in is only a 0.6% margin and only 75% of the votes being counted. So it's very much still up in the air, although I think it would lean to Biden's favor. If I had to put money on it now, I wouldn't be putting money on Trump to take it from here.
I think the way to look at it is what you're saying. Yeah, it's an uphill battle if you're Trump. However, the thing is that you're slightly further up the hill, I guess.
Yeah.
But it's only, like, it is so incredibly close.
Yeah.
Pennsylvania's at 87% of the vote has been counted. North Carolina, 95% of the vote. Georgia, 95%. Arizona, 86%. Nevada, 86%. Alaska, 56%. So Alaska's definitely going to Trump. That's not going to be Joe Biden's. But man, oh man, who would have thought that it would end up like this? Everything we were reading before the election was just going to say, predicting just a blue wave. I mean, I was reading things that were saying Florida's going to turn blue, Texas is going to turn blue,
well, the polls for Florida had Biden up 4%.
Really,
which is
4%?
Was bigger than margin of error, I believe. I believe I've got that correct for Florida.
That's insane. Well, he lost by 3%.
Yeah, so. I think maybe Biden lost by 3%, but it was a 1% on the polls or something like that. I can't really remember.
Okay,
but
right.
Yeah, it's crazy how many states that Trump won that the polls said that Biden was going to win. That's the crazy thing. Even what happened in Texas was interesting. I thought that almost was going to go Democrat for a second there.
Pretty insane.
It's wild. Yeah. Wisconsin, I think, is probably the biggest talking point out of what's happening at the moment.
Yes.
So Wisconsin's I believe it's been given to Biden, right, at the moment.
Yeah, this is where we're at with Wisconsin. 99% of the vote has been counted. Joe Biden is currently in the lead. 1,630,000 votes to Donald Trump's 1,609,000 votes. So that is tight.
Yeah,
that is tight, man. We could talk about this stuff for a long time because it's so interesting because it's so close.
It's insane. And if the remaining toss-up states have finished, I should say, because you're listening to this in the future, but if they've finished the way that they look now, where Trump wins 3 and Biden wins Nevada, it's really that Wisconsin state that decides it, which is crazy. And it's, I think, what was it, 20,000 votes difference or something?
Yeah.
Very small
about
margin.
20,000 votes, exactly right.
It's fascinating when it's really close. Trump's called for a recount for Wisconsin already.
Yeah, of course. Isn't that so funny? Isn't that so bizarre? That's classic Donald Trump. I mean, he's going to do anything he possibly can. But I mean, he's already stated that he's going to challenge the results in the Supreme Court if he's not elected.
Yeah, I'm not so surprised that he's challenging it. Most states, I think in the US, if the gap is less than 1%, triggers an automatic recount. So recounts are pretty standard if it's close. Wisconsin's one of those states where there's no auto recount, but you can request a recount if the gap is less than 1%. So I would have imagined that either the Democrats or Republicans would have requested a recount. It's happened many times before when it's really close. But I was doing some research, and I think that recounts only ever really move a few hundred votes at the most. So a 20,000, as small as 20,000 votes is in the scheme of Wisconsin as a state, it's very unlikely that they were miscounted by 20,000 votes, if that makes sense. So
this is actually something I don't know about the United States. Are the votes are any votes counted by hand, or are they just processed by machines? I've got no idea.
I don't know. I would imagine they would be counted by hand. That's usually,
you reckon?
Yeah, okay. I would imagine so. Maybe there's a combination of both.
Right.
Yeah.
I'm not sure. Yeah, I would imagine it'd be like, you know how you used to do those, or even in university, you'd have like maybe multiple choice questions, and you just have to circle the little circles, A, B, C, or D.
Yeah.
You remember those? I would imagine they just have a form like that they could just spit into a machine, so the machine can just read it. But
Yeah,
who knows?
I mean, that would be the smart thing to do. You would think that the crazy thing is there's so many ways that mistakes could be made. Human errors and computer errors and all of the different states having slightly different ways that they're running their voting. Like Pennsylvania, for example, election day's over and they're still accepting votes. And that's very different to a lot of states. Florida's received all of their votes. Like it's kind of said and done, whereas Pennsylvania, not only have they not finished counting, but there's still votes coming in. People are still...
Yeah, that's crazy.
So having... I was listening to someone say that it's kind of crazy that they have this national election, but every state can kind of choose how they go about it, and there's all these different rules. It's crazy. It's very interesting.
In the recent ACT election, a little bit closer to home, we actually did... implemented basically all electronic voting, which was fantastic, and that worked really well. I think there was like over 80% of the votes cast were electronic voting, so you'd still show up to a polling booth, except they were just touch screens on the polling booth.
Right.
So you'd walk in there, you'd wash your hands, the screen would get wiped down. There was no paper involved. Everyone that was recording your name was just on a laptop, so they just tick your name off on the laptop on the database. Then you just walk over. It's like on a big kind of iPad thing, and then you just tick the boxes electronically, send it in, and it worked really well. And it's also so much easier to count because it's just done. It's just submit it to the database kind of thing.
Yeah, I mean it removes so much errors just by doing it on computer. I could definitely see a point in the future where
definitely.
I mean, certainly doing that where you physically go and then use a digital device. But if there's a way that we can sort of have, I guess, online identification that's as good as sort of in-person identification, then you could imagine just, being able to vote from home. On a
just
computer
log on to
of some
a website.
form. And that might seem really strange at the moment. That certainly would not be a suitable way to do it right now, but I'm positive that that's the way it will go, 10,
of course.
30, however many years it takes to get there.
Yeah, definitely. Yeah. I mean, there's always going to be... It's like how you can still fill in a paper tax return, but it's just like the ATO basically actively discourages you from doing so. They're just like, please just do it online.
Billy, we've got another one.
Yeah, exactly. Yeah, exactly. What was that? Another person sending a paper tax return. All right, let me get my pencil out.
Guy's just got this dark office in the back. The guy's doing the paper tax returns.
Yeah.
Come out.
Yeah, he's got a little typewriter next to him. Yeah. A little pencil and eraser.
Little ink blotter.
He's got this notebook. He does all of his mathematics. He does all of his sums just on this piece of paper next to him. Oh dear. Anyway, so hopefully the first 20 minutes of this podcast is actually still somewhat relevant by the time it comes out on Saturday.
Yeah. Well, I mean, if they're still doing recounts and that sort of thing, I guess it's likely that by the time you're listening to this, you'll have an answer, but there'll probably still be recounts going. So whether that has an impact, I don't know.
And they were saying that potentially this recount business, this Supreme Court business, could take weeks and weeks.
Yeah.
So it may not even be like we may not be recounting anything. Well, obviously in those states that you said it's automatically triggered, then I guess they would be recounting. But yeah, some of the legal stuff, it could take weeks, and that's just, I don't know, that's just not what anyone wants. But I guess it's just the way it is.
Yeah, it's
There's nothing worse than watching the broadcast all of yesterday, expecting to know a winner by the time the broadcast is over, and then they say, "Well, thank you very much for tuning in to CNN Election Day. America votes, or America decides, and that's it for our coverage. And you still don't know who the president is. All right, good night, America."
I think if Biden had won Florida and a couple of the others early, they would have been able to call it pretty early.
Of course. I think if Biden had won either Texas or Florida, that would have been it.
That's enough, yeah.
That would have been it. Easily, probably.
So very early on it was...
Do they both have more than 30? I don't even know how many.
Florida had 29 and Texas had a lot. I don't know, 30
Yeah,
something.
they've got a lot. So I think they've got Biden at 253 at the moment, so that would have taken him to like 280. So yeah, he would have won it. There you go.
Yeah.
But not the case. Down to the wire. Oh well. Helps all the media companies out there, all the news companies, make more money.
Yeah, they can milk it for another couple of days.
Yeah, exactly right. Oh dear. All right, shall we move on into our next news story then? We got some earnings to talk about.
Yes,
today
we
as well,
do.
don't
And
we?
these were from Thursday last week. So these are, quite a while ago, but of course we had our 100th episode last week. So
Yeah, we had the special.
We're
playing catch up.
Yeah, we're playing catch up at the moment. This is actually the first. Is this the first earnings we've spoken about? No.
No, we did some Chipotle and Netflix
that's right.
and
Yeah.
something else. I can't remember.
Yeah, so we've done a couple of them, but certainly not that many. We'll try and
Still got
continue.
some big dogs.
Yeah, we've still got a fair few to go through. But where should we start? Should we start with Facebook?
Yeah, take us through Facebook.
Yeah, so
Why not?
Facebook-
I like Facebook. Facebook's interesting.
Yeah, we're going to talk about both Facebook and Google, and they both reported on the same day, and they both reported their Q3 earnings, and they're both the digital advertising businesses. So this will maybe be a nice little comparison we can do. But for Facebook, revenue came in at $21.5 billion, which was up 22% year over year. That is
Right.
21.2 billion of that was from advertising, so that's obviously 99 or something % of their business, and 249 million was from their other category, which is either payments and then Oculus Rift, their VR company.
Yep.
And that's
but definitely advertising is where it's at with Facebook.
Yeah, exactly. I think their other segment their revenue was actually down 7%. So I don't know what happened there.
All right.
But their core advertising business was growing at 22%, and
It's pretty decent.
earnings per share was up 28% to $2.71, which is the first time in quite a while. This year, I mean, that earnings have grown faster than revenue. For 2018, 2019, they were spending a lot of money to I guess, build up their headcount, their staffing, and to improve their platform. And as a result, they were growing their revenue, but then growing their earnings at a slower rate. So this year, we've kind of seen that trend change a little bit, which is positive, certainly, for Facebook shareholders.
So gross margins were decreasing.
Yeah, I think operating, just probably because a lot of the higher expenses were like staffing expenses, like having higher staff. So, but their margins were decreasing for a little while there.
Yeah.
And I mean, they're still trending down. It's just that in 2020, they had the benefit of a lot of people working from home and a substantial increase in how many people were using Facebook, even though they're such a huge platform already. Also,
I just made a big mistake. Of course, it's operating margin, not gross margin.
Yes.
Anyway,
yeah.
sorry, moving on.
No, that's okay. Some of the main numbers to look at for Facebook would be daily active users and monthly active users, and these numbers are just astounding. I'm always so surprised that they continue to grow these numbers. Daily active users came in at 2.54 billion, and that was up 15% year over year. So, still growing that number at a ridiculous rate.
Double-digit growth. Jeez. Year over year. Even though it's year over year, that's still impressive. Double-digit growth when you're in the daily active users up in the 2.5 billion range.
Yeah, and I mean, quarter over quarter, this is 2%, 3% growth, but still very significant. Monthly active users was 3.21 billion. So, over 1/3 of the global population uses Facebook every single month. I'm not sure if that's good or sad.
Yeah, well, I don't know. I mean, it's are you a Facebook shareholder or not? That'll give you the answer.
It's great. Log back into
fantastic.
Facebook, guys.
Yeah, that's unreal. But no, like we say, every time Facebook earnings come around, we always end up saying, how crazy is it? How crazy is it that more than a third of the world's population is logging on to Facebook, one of Facebook's apps, at least once a month?
Yeah.
I mean, that's just...
Where are they finding these people?
Yeah, I reckon. Questions raised.
Mark Zuckerberg
Are these people
1,
legit?
Mark Zuckerberg 2, Mark Zuckerberg 3.
Oh, that's hilarious. True, how would we know? How would we know? Just got to hope that someone's keeping an eye on the accuracy of the legitimacy of the accounts that Facebook has.
Yeah. That is an interesting kind of discussion, though, because it's kind of in their favor, at least if they're just looking to make their company look good on the surface, not actually be good. But it would be in their favor to not delete fake accounts then.
Yeah,
if it could increase that number. Obviously, it's terrible for the business. So if you had a good management team, you would think they would be not doing that. But if it was just a management team that just needed to boost their daily active users to get their compensation, then
just don't delete fake accounts.
Don't delete fake accounts, yeah.
Yeah, but then, and then obviously the flip side to that is that all these fake accounts are still taking up server space and taking up, this
That's
and that, detracting the experience of everyone else. So there's two sides of the coin. You're right. If you just needed more active users, just like, this month we just won't delete all the fake accounts that are popping up out there.
Yeah. One of the notable things I saw out of their users was, so for Facebook.com, just the main Facebook platform, they actually saw a decline in monthly active users in their North American segment. So that's the first time that's happened in a long time. They were down 1 million people on monthly active users and down 2 million people on daily active users. And that's on a quarter-over-quarter basis, the number of people they were down. So they actually saw a decline, although, to be fair, I think they had something like 250 million monthly active users in US and Canada, and there's about 360 million people in the US and Canada, so they have a very sizable chunk of that market. So it's going to be very challenging for them to increase the number of users there, considering a good chunk of that 360 million people are children who are not using Facebook, and then you also have people who are really old who are also not using Facebook.
True.
That's kind of like the main numbers out of Facebook. I was reading about what sort of management was saying about, what they're seeing over the next year, and their biggest concern at the moment is that there's been the release of a new iPhone software called iOS 14. And this software actually makes users have to opt in to app tracking. So now if you log into Facebook using iOS 14, it will ask you if you want the app to be able to track your data, basically.
Okay.
And why this is a big concern is because, of course, Facebook uses that data to then provide you ads in other apps. So they call this ad category audience network. And if you've ever been on a mobile game or anything and you've seen ads, sometimes they're Google ads and sometimes they're Facebook ads that you're seeing inside of the game that you're playing. But their ability to provide those ads, it requires users to now opt in to a certain level of tracking.
Oh, okay, right.
Yeah, so
it just means that they might take a little hit in the advertising revenue for the users that are on iOS 14.
Correct. And in the specific segment, which is audience network, which I was having a little bit of a look, and Facebook believes that audience networks is quite a significant contributor to the performance of businesses' ads. It's quite a relatively low spend, so it's not where businesses are spending the most money, but running audience network ads in combination with other ads has a significant effect on the performance of those ads. So you would anticipate that, just in perfect theory, you would imagine that if they're no longer able to run these ads, businesses are getting worse performance, businesses would spend less money or be less inclined to move advertising money from other platforms onto Facebook. So that's something.
But to be clear, this is not advertising that shows up on like the Facebook app or Messenger. No, this is other apps.
Yes, this is outside of Facebook.
Okay, yeah.
Yeah, so that was interesting, and management also said that, and the thing I'm about to explain, they describe as a negative, but so they say that management believes that they benefited from COVID, and that's obviously to be expected. They believe that they benefited from an acceleration of businesses transitioning their businesses offline to online, or adding an online presence, but also spending money directly on online advertising.
Oh, really? Okay.
And as a result, they expect that next year they could see slower growth. So in a similar way to we spoke about with Netflix, where they believed that in Q1 and Q2, they saw a pull forward on users who were expected to sign up later in the year, but just did it earlier because they had to stay home. Facebook sees a similar thing. They expect that the people that they would have got next year to transition online and start advertising online, they have been brought forward. So that's a bit of a concern for management at the moment. I mean, it's not really a concern for shareholders. It just means the money's been brought forward. But if you're looking strictly at growth rates, then that's going to have a negative impact on that.
Interesting, because we've seen kind of in the advertising space initially when the lockdown was happening, all the money kind of got sapped out of online advertising.
Yeah.
But as we've noticed, and as I'll talk about as well with Google, that money's come back.
Yeah.
I don't know what it was. Maybe at the worst of the lockdown, at the height of the uncertainty, maybe companies were just like, oh, we better just halt online advertising, save this money just in case.
Yeah.
And maybe now they're just like, actually, no, what are we doing? It's still smart for us to spend online. Still helps us get lots of customers. So I don't know.
Yeah, I think that makes sense.
Interesting.
It's probably that businesses initially were looking for the easiest places they could cut costs to kind of protect their business, and then you kind of realize that you have a lot of people staying at home, and that in using cheaper online advertising in front of those people could be really beneficial. So I guess that's kind of what happened. And just from an anecdotal perspective, I'm not sure if you saw this, but our ad rates, the rates that advertisers were paying for ads on my videos was fluctuating a lot throughout this year. Went up and
plummeted.
down and up.
For me, it plummeted in the lockdown, and now it's kind of stabilized back to normal.
Yeah,
that kind of I don't know. It was kind of weird because on one side we got the our revenue per say 1,000 views would drop, but because we were talking about the stock market, and the stock market was doing all sorts when the lockdown was at its worst, then our views were up.
Yeah.
So kind of all it's kind of one thing dragged us down, another thing lifted us up, which is kind of weird. But yeah, you're right. Sorry.
No, not at all. It's a wild ride running a YouTube channel.
YouTube.
What are we going to
YouTube
make
gods,
this week?
What are we going to make this month?
Nothing?
Is it going to
Cool.
be good or is it going to be nothing? Oh, man.
Oh.
But no, seriously, you can totally understand why a lot of YouTubers, they try and take most of their income streams off of YouTube after a while because it just fluctuates so much.
Yeah, it's not good. It's not good.
We'll talk about that when we talk about Google.
Yes, we'll get there. Out. I'm getting ahead of myself. There's only a couple of other things for Facebook. So in terms of their balance sheet, their financial position, so they currently have $55.6 billion in cash and cash equivalents. So they are loaded up on cash. They have no debt, and their equity position grew by 16% during the quarter. It must have been during the quarter, to $117 billion in equity. And in terms of how investors liked or disliked the news, the earnings, the stock was up 5% on the day. And then it kind of dropped over the next few days, but that might have been driven by just the overall market going down as well. And then today the stock was up 8%. I don't know what to attribute that to. Nothing specifically happened except that we, of course, just had the election day. So besides that, I don't know if there's any specific news that came out of Facebook that I missed, but as far as I could see, I couldn't see anything.
There you go. Yeah, it's a good quarter for Facebook. I just wanted to do that quick comparison. So Facebook has $55.6 billion in cash and cash equivalents. So that's the thing, and no debt. That's the thing with these online advertising companies. They are literally, I don't know, they got to be the closest thing to just a money printing machine that exists.
Pretty much.
Is there anything that's closer to a straight money printing machine? I don't know.
The crazy thing to me with these kinds of businesses is they generate such a high return on invested capital. And that's even while a significant amount of that capital is just cash. It's not earning anything. It's not like they're earning a 20% ROIC, but if you actually remove the cash, which really isn't doing anything, it's just there.
It's just sitting
there.
there.
Just looking for something to do with it. Their return on their investments is insane. And they have a ton of cash around. So it's a very weird world.
That's a very good point. Because Google's another one that has an amazing ROIC in like the 20% range.
Yeah.
I was just looking, Facebook had $55.6 billion in cash and cash equivalents, which is a lot.
Yeah.
Google has $132 billion in cash and cash equivalents.
Yeah, and
like that's bloody insane.
Yeah, and depending on how you do your return on invested capital equation, the most common one is some kind of profit figure divided by equity plus long-term debt. But if you took their equity plus long-term debt, maybe I'm starting to read some of your stuff, but it's about $230 billion that they would have in capital for that equation.
Yeah.
But as you just said, 132 billion of that is cash. More than half of it's cash. So it's in reality, they're probably generating a far higher return on their investments. So it's fascinating.
Yeah. No, it's very good. All right, shall we move on and then talk about Google?
Yes, let's do it. Take it away.
All right. Well, here we go. I chucked this headline in, or whatever the first sentence of the article was, because I thought it was pretty funny. So listen to this. So we're talking Google Q3 earnings here. So the article read, despite a global pandemic, the biggest tech antitrust lawsuit in more than 2 decades, and an escalating battle against accusations of censorship, Google is doing just fine. Which is so true. I mean, this is a story of Google. I mean, Google, I can kind of understand where people come from, where they're like, man, we got to break up these big companies, because at this point, Google can basically do whatever they want, and they can get fined for it, and they can still profit. Like, they can still come out the other side making a lot of cash.
Business is just too good.
They really are. They are. I mean, credit to them. I mean, this is the kind of capitalist way of looking at things. I mean, they've made a business that a lot of people like and a lot of people use. So, I mean, good on them. They probably deserve that more than me. I haven't made a business that's been more helpful than Google. So there you go. But that's kind of the capitalistic way of looking at things, I suppose. So yeah, what did it say here? Strong bounce back because that's right. Last quarter with the shutdown, Google posted its first quarter-over-quarter revenue decline in history. So last quarter the total ad revenue fell from 33 billion to 29.8 billion. However, this quarter, that number has rebounded from 29.8 billion up to 37 billion. So that's what their advertising revenue. So that includes Google, YouTube, and the Google Network members' properties. Right. Okay, so that was just advertising revenue. That wasn't even total revenue. So advertising revenue has definitely bounced back. Revenue, just total revenue, has also bounced back. $46.2 billion for the quarter, which is up 14% year over year from $40.5 billion. It's up 20% quarter over quarter from $38.3 billion. So yeah, if we break it down, the bulk of the money that they make is from Google search. So $26.3 billion from Google search, $5 billion from YouTube ads, which was up from $3.8 billion in Q3 2019.
Wow.
So yeah, quite substantial growth in YouTube ads, but still not as big of a chunk of revenue as just straight up Google search, $26.3 billion versus $5 billion.
Yeah.
Then if we trickle our way down, the Google Network members' properties, so people that use Google Ads on their own things, revenue there was $5.7 billion, so a little bit more than YouTube. And then, so overall, their advertising business, that's where we hit that number of $37 billion, which is up from $33.7 billion in Q3 2019.
Right. So that's, sorry, you're going to say? No, I was just going to just say that. So that puts kind of Google's business at about twice the size, not quite twice the size of was Facebook's advertising business.
Yeah. What was the advertising revenue?
21 billion.
21. For the quarter. Okay. And then this one was 37. Yeah. So roughly, yeah. Very interesting, actually. I've never made that comparison. That is quite interesting. Google is a beast.
It's a big company.
Yeah. And technically, when we say Google, we shouldn't actually say Google. We should be saying Alphabet, because this is Google's parent company. But I mean, for all intents and purposes, I mean, it's Google. Yeah. So what are we talking about? Moving on from advertising revenue, of course, another big part of Google's business is their cloud revenue. So they made $3.4 billion, which is up from $2.3 billion Q3 last year. And then Google Other, which I'm not exactly sure what is in Google Other revenue. It does say that it's YouTube non-advertising revenue.
I can actually tell you because I looked at this the other day.
Good. I'm wondering, one thing that I'm interested in is where does hardware slot into their revenue? Do you know that? Is that in other?
Yeah, so other includes hardware. It also includes the in-app and just regular app purchases in the Play Store. It includes YouTube non-advertising revenue, as you just mentioned, which is basically YouTube Red, I think it's called, and YouTube TV, which is their television network. And I believe that's it. I think that's all of the other little things that they have. Yeah. So it's kind of it's a little bit of a weird mix of a number of different things.
Yeah. But anyway, that they made some good revenue there, 5.5 billion in the quarter, which is up from 4 billion. So yeah, a strong bounce back. They had 24% operating margin, so which is about the same year over year. So they had operating margin of 11.2 billion. And then turning to the cash flow statement, they had 11.6 billion in free cash flow for the quarter, which is great. And then, going back to those balance sheet numbers as well, which is what we were talking about with Facebook there, $132 billion of cash or cash equivalents and only $14 billion in long-term debt, which is pretty phenomenal. I was just having a bit of a squiz just through the balance sheet. They have total assets of $299 billion. They're almost $300 billion of total assets. But, of course, when you just think about assets, you have to compare that to liabilities. Total liabilities of only $86 billion.
Wow.
$299 billion of assets, $86 billion of liabilities. How insane is that? $212 billion of equity.
It's just a cash machine. Businesses that...
It just prints money.
Yeah, it's just a money printer.
Basically.
Why would you need debt if you've just got a money printer?
Yeah. And I mean, why do you need debt if you can just, take a couple billion out of the $132 billion cash pile?
Yeah, I wonder what that $14 billion in long-term debt's for. Like what?
I don't know. I think that, sorry, I'm going to try and squiz back to the balance sheet here.
Yeah.
Because I think last quarter they didn't have anywhere near that long-term debt. Sorry, I'm just trying to find it. I've gone too far now. That's classic. Liabilities, long-term debt. So this is... this is last year. Hang on, let me get this right. So as of September 30, 2020... they had 13.9 billion in long-term debt. As of December 31st, 2019, that's a weird comparison. That's not the right quarter. Anyway, as of December 31, 2019, they had 4.5 billion. Actually, I reckon the reason they made that comparison is because this is before the pandemic started and where we are now.
Right.
I think that's why they probably made that comparison, which doesn't match perfectly. So I reckon what they would have done is they would have, in part, taken on some long-term debt just potentially as a cushion, as a just in case if they got given the opportunity to do that cheaply.
Yeah.
I don't know.
Must just be really low interest rate, I would imagine.
Yeah. And I mean, we've seen, I think even Berkshire Hathaway took on some debt not too long ago, even though they've got so much cash as well. I think it's just, if you can borrow it, super low interest rate, I mean, may as well. You never know. I don't know. Something like that.
Yeah, it's fascinating.
Good
because
question.
You have,
I don't know that. Yeah, I don't know the answer, to be perfectly honest.
Yeah, I don't know either. It's kind of interesting because you have a Facebook. It's a very similar business to Google, a little bit smaller, and they also have a ton of cash, but then they have no debt. And then why does Google decide to just have a little bit of debt? Like, what's going into the difference between those two? That's what I wonder.
Yeah.
Maybe someone can tell us.
Good question. Yep. If you're an expert, let us know. All right. That's basically all I had for Google.
Yeah.
Basically, I think the story of Google's Q3 earnings, if I had to summarize it in one sentence, is last quarter it was looking a bit sketchy because they had declining revenue. However, this quarter, no worries at all. It's bounced back plus some.
Great.
I
Interesting.
think that's basically the gist.
Yeah, I'll be very interested to follow, and I said this last week or the week before, to follow this antitrust lawsuit. I hope that we find some things out relatively soon, but I guess we probably won't. But
Probably not.
It's going to
Who
be
knows?
definitely be a landmark case if the government is successful. And there's some substantial changes there. It will rock a lot of the tech businesses on the stock market, that's for sure. Because if Google is forced to break up or even just pay a huge fine, I can guarantee you they're coming for Facebook or Apple or one of these big companies next.
Oh, yeah.
And they'll use that case as a benchmark for their ability to do it. So
once they sting one, they're going to sting them all.
Yeah.
Yeah. But the funny thing is, I just kind of thought about this just now. Imagine if they handed down a $100 billion fine to Google. They would still have $32 billion worth of cash. I mean, their business, it wouldn't be as beast as what it is right now, but I mean, they'd still be able to do that.
Yeah,
they'd be like, oh yeah, we can pay that. We've still got $32 billion in cash and cash equivalents, only $14 billion in long-term debt, whatever.
Fine, we won't acquire that bank.
Exactly. I mean, it'd bring their total assets down to $199 billion, and their total liabilities would be at $86 billion.
It's just ridiculous. And
they'd have $112 billion of equity. So there you go.
Amazing.
That's kind of crazy. You could find them $100 billion and they'd still be fine. Anyway, let's move on.
What have we got? We've got one more story.
Yeah, we'll get through this one. This one's pretty boring, but I mean, we should talk about it.
Yeah, so the RBA, they had their meeting, their monthly meeting a couple of days ago, and they have decided to start doing quantitative easing. So they announced, from what I read from ABC, they announced $100 billion worth of quantitative easing, which basically means that they're going to be buying $100 billion worth of government bonds over the next 6 months. And the breakdown of those bonds was about $80 billion of Australian government bonds and then $20 billion of state government bonds, according to ABC. So the other thing about these bonds is that they're going to be buying sort of long-term maturity, or I guess these are mid-maturity, between 5 and 10 years. So. If you're kind of wondering how, sort of what effect this has, when the government buys these government bonds, it essentially raises the prices of those bonds and therefore lowers the interest rate on them. And that's really the target that they're going for. Is they released a new target for their cash rate, the official interest rate, and that target is now 0.1%, which is incredibly low.
Indeed it is. Man, that's crazy. There we go. It's basically, almost free. I wonder if, I don't know enough about negative interest rate policy to talk confidently about it, but I wonder if that is something that we'll start to see. I think there are some European countries that have negative interest rate policy at the moment. I'm not quite sure.
Yeah.
I'd have to check that, but yeah, it seems so bizarre that we could potentially get into this period of negative interest rates where it's just like, if you hold cash, we will penalize you.
Yeah. And I mean, you would imagine that if the rate of interest is currently 0.1%, assuming there's any level of inflation at the moment, the real interest rate, so including inflation, is already negative.
Good point.
So I think I don't know off the top of my head, I looked at it the other day. I think it was 1.5% is the current inflation rate in Australia or something like that. So that would seem to indicate that we are already in real negative terms. But
yeah, true.
Yeah, it's very interesting. In terms of, I guess, what they're trying to achieve with this, pretty stock standard stuff. By lowering that cash rate, it sort of encourages more borrowing. Borrowing becomes cheaper and therefore encourages it for individuals and businesses. It helps the Australian dollar to stay low, which encourages investment and economic growth domestically. And yeah, that's kind of some of the major outcomes that we'll have from this.
Couple of buzzwords. Economic stimulus. That's what it aims to do.
I get to give a nice presentation.
Yeah. Oh man, I reckon
Jobs.
if you're like, I reckon. Yeah, I was just thinking about that. Stand up and just be like, through our economic stimulus, we are going to increase the number of jobs in Australia quite significantly. Economic stimulus is very important to us. We want to stimulate this. We're going to stimulate that. Economic stimulus, jobs. That's all you'd have to say.
Pretty much, yeah.
And everyone in Australia will vote for you. Just answer any question as a politician. Any question you get asked, just answer it with economic stimulus.
Yeah. Jobs.
Jobs. Yeah. Look, I know you're asking about, I don't know, inequality in Australia, but let me tell you about jobs.
The one thing that fixes inequality.
Is jobs.
The more jobs, the less inequality. The more equality.
Exactly. More economic stimulus equals equality. The key to getting to enabling same-sex marriage is to stimulate jobs. Oh gosh. Ay. So that's like every Australian politician.
Pretty much, yeah.
Anyway, I just thought I'd chuck in a little bit on the end of this. So, so the RBA, the Reserve Bank, Australia's central bank, they lower the interest rates, they buy the bonds. And what's the reaction out? So the reaction, hopefully, is that, the RBA wants to encourage Australians to borrow more. They borrow to invest or borrow to, sink some money into the real estate market. And if we have a look at the major banks, then the banks have passed on some of that benefit to their customers. So we've got the article reads here: Commonwealth Bank, Westpac and NAB have taken a knife to lending rates following the RBA's decision on Tuesday to cut the cash rate to 10 basis points to better support the Australian economy out of COVID-19. A statement on Wednesday morning, CBA said its owner-occupied 4-year fixed rate would be reduced by 100 basis points to 1.99%, the lowest fixed rate the bank has ever offered in its 108-year history. Westpac has also moved its 4-year fixed owner-occupied rate to 1.99%. NAB on Wednesday afternoon said its 4-year fixed rate its 4-year fixed owner-occupied rate would move to 1.98%, the lowest rate the financial institution has ever offered.
Wow.
So there you go. So I guess, you want to buy a house?
That is really low. And I mean, it's only 4 years fixed, but
I mean, still,
it is very low.
I mean, you can lock in 1.98% for 4 years.
Yeah.
I mean, they can't change that on you. It's fixed. So, I mean, that definitely gives you some level of security. I don't know, clarity over potentially your finances over the next 4 years. So,
that's a good point. Yeah, I mean, a mortgage would probably be the biggest expenditure for a lot of people.
Oh,
so
definitely.
To be able to lock that in at a very, very low rate, I'm sure. What did you just say? It's the lowest they've ever...
For NAB and for CBA, the lowest rate they've offered on the 4-year ever in history.
Wow. Incredible.
So, 4-year fixed. So there you go.
Yeah.
Everyone go buy a house. Housing affordability just got even worse. Well, house prices went up, but loans, I guess, loans are easier. Anyway, I get that's that story.
We'll leave it there. Have we got time for some Q&A? Yeah, we've.
You want to do maybe just one?
Yeah. All right. We'll do one. All
right. You pick.
All right. Quick skim.
quick skim. Let's do this one. Great podcast, gents. Really enjoy them. Are there any industries you believe are up and coming or even coming back and may be worth looking into from a value investing perspective? They give the example here of potentially like the AI companies or the cannabis industry. In your, I don't know, from your perspective, your view on the world, what are some up and coming industries or industries that you think might be big in the future?
Yeah, I mean, I don't look too much into really new industries that are kind of coming around for the first time. I like industries that have a long track record. But with that said, I guess one area in which you would say a new industry is growing is digital advertising. I mean, obviously the advertising industry has been around for a very long time, but in the last 10 years in particular, probably the last 20 years, but particularly in the last 10 years, there's been a significant transition of businesses advertising through traditional means to then advertising online. And it's also an interesting industry, I think, because you have two players that make up the vast majority of the market. Facebook and Google, which we just spoke about, they both make up combined, I think, about 90% of the online marketing space. So that just means that as this tailwind continues, as businesses continue to move their advertising spend online, it's mostly going to these two businesses. And I'm sure that was probably part of the thesis that, who was it? Was it Michael Burry that invested in both of them?
Yeah, I believe so.
Yeah. So, I mean, that kind of is, you can very easily, I guess, make a bet on that industry. You don't even need to buy an index or anything. You just invest in both of the two companies and you basically capture 90% of that market. So that's one.
I think Klarman did as well, didn't he?
Yeah, maybe it was Klarman. Maybe it was Klarman that I'm thinking of.
I know that Burry definitely bought those call options on the two.
That's it.
He did own the stock, but he doesn't anymore. He dances around in his positions sometimes, Michael Burry. But yeah, I think we're talking about Klarman. I think you're referring to Klarman.
I was definitely referring to Klarman. Yeah. So yeah, that's right. Yeah. So that's one that I'm kind of a little bit close to because I'm invested in Facebook. And we obviously have a little bit of involvement in online advertising on both sides of it, actually. So that's kind of my view on things. But other than that, I can't think of anything off the top of my head. Have you got any that you see?
I mean, I would definitely agree. Over the medium term, then digital advertising is just, I can't see it slowing down. That's for damn sure.
Yeah.
But I mean, just thinking more broadly, I tend to just think about what industries are going to do well. I don't know. I just picture what the world is probably going to look like in 20, 30 years' time and then work backwards. So obviously, like, no surprise that renewables is going to be a ginormous industry. And even like energy, just like energy in general, because it's going to, like, everything that we do will probably be powered from electricity. So energy will be huge, renewable energy, electric vehicles, all that sort of stuff. The Tesla kind of aspect, I guess. Definitely, I agree that the AI is going to be huge. AI could be like scarily huge. So yeah, like it may go huge or it may not be too big of a thing. I think it really depends on the regulation of AI. Because AI could essentially, like, before we die, AI could basically be running the whole world. It is getting so much better that quickly. And the fact that everything these days is going kind of into the digital space and on the internet and that sort of stuff, I mean, that is just the perfect environment for AI to just go bananas. I mean, we're kind of already seeing it. I mean, we're not really seeing like properly crazy AI, but I mean, we already see it, like with Tesla's cars. They drive themselves, and Google's neural net, they know what you want to search for before you've even finished typing it, that sort of stuff. But that's just going to go absolutely crazy. I think the other big one, which may or may not go really huge, I have a feeling it will get huge eventually, is genetics. So genetic engineering, that sort of stuff. Obviously, the only way it would get big initially is in the curing of diseases, because that's probably the only way you can get ethics committees to agree to various studies. But I mean, some of the technology that we've got around genetics that we're just not allowed to use is just insane. So I have a feeling that we'll get to a point, and there's a lot of ethical questions over life extension and that sort of thing, and even cloning is, like, obviously has been a ethical issue that we've talked about in the past. But I mean, if some of these ethical issues are overcome, then genetics could be huge, like could be massive. Especially if we can figure out ways of, extending people's lives by 20, 30, 40 years just through genetic engineering. Yeah. Then, I mean, there'd be a lot of people that would sign up to that. That's for sure.
Oh, yeah, absolutely. It's really fascinating. I haven't looked much into that at all. I'll have to find
I only have a basic understanding of it because I don't really look into it because it is so clamped down in ethics at the moment. Yeah. Like, I probably wouldn't be looking to invest in that area just because there's so much ethical uncertainty, but that's my take anyway.
That's the kind of the fine balance you need to make, right? Because these new industries are really exciting, but there's also a lot of uncertainty there, so you need to kind of balance reducing your uncertainty by investing where there's going to be consistent cash flows in the future, but balancing that with investing in industries that have a lot of potential as well.
Yeah, true.
Finding that fine balance is important, I think.
Yeah, so like your example of digital advertising is the perfect example of what you're just talking about.
Yeah. I mean, at least I like to think so.
Yeah, well, I mean, it's been around for 10 years,
Yeah.
at least, and it's shown amazing growth and consistent cash flows. It's been very profitable, increasingly so, and it's not going to go anywhere in the near future. So, no, you're right. That's a good example.
Yeah. All right. Should we wrap it up there for today?
Yeah, let's wrap it up.
Awesome. Well, thanks everyone for tuning in as always. And if you have a question for next week, then you can head over to the YouTube version of the podcast. What's the link again? Is it youtube.com/The Young Investors Podcast? I think that's correct.
Oh, you're putting me on the spot.
I think,
yeah, probably.
Pretty sure it's that. The Young Investors Podcast.
Young Investors
or you can just
Podcast,
search it anyway and it will come up. Head over to click on the channel and then click on the latest episode and just leave your questions as a comment down there. And every week we take those questions and we get through as many of them as possible. And as always, if you have companies you want us to look at, earnings for companies you want us to look at, or news topics or anything you want us to discuss, you can also leave that there. But thanks everyone for tuning in. Thanks Sharesight for sponsoring as always, and thanks Brandon for joining me.
All good. All right.
And I hope you guys have a good week. See you later, guys.
See ya.